Hello traders and welcome to our daily summary for February 1st, 2016. Almost every analysis of ours seems to be still valid. We start with the German DAX, which despite the sharp decline at this point here, it remains supported by the rising trend line. The momentum remains still bullish, and the sharp bounce occurred directly after prices were rejected at this trend line and the 55 period SMA. Overall, we expect higher prices in the coming sessions, starting with tomorrow, and prices should move higher than 144 SMA to confirm the midterm bullish reversal on the index. We continue with the British pound, which moved sharply higher as we suggested with our weekly report during the weekend. And now there are two possibilities. The first one, which is our primary view, is that this wave here was wave 1, and here we have a correction of ABC, and then prices here are moving in wave 3 as the strength and the sharpness of this upside suggests that this is wave 3 of some degree. A break above the 144 SMA, a 144 period SMA would be bullish reversal signal, and will signal that prices are moving towards this lower boundaries of that channel. The momentum is clearly bullish, and we have a bullish cross with a 9 period SMA. The Swiss franc posted a correction to the downside, but prices remain supported by the 21 period SMA. The attempt to move lower was rejected, and prices reversed higher, creating a candlestick that is something between a doji and an inverted hammer. If it is a doji, it reflects indecision of the investors to sell the pair lower than the 21 period SMA. If it is a hammer, it is a bullish reversal signal of this minor downtrend, and prices should continue to the upside until they reach this top here, which will provide resistance for sure. Overall, the count remains intact, although, as we mentioned in our weekly report, the overlapping waves suggest that this is the alternative count will become our primary for a leading diagonal, large leading diagonal here. Oil has reversed lower, breaking through our stop loss order, and it made it broke the rising trend line on the RSI, and it remains below the 9 period SMA, which is a clear bearish signal. Prices have moved back below the trend line and the two SMAs, and only the 55 period SMA is expected to provide resistance for now. We will not be surprised, however, if prices bounce from this level to continue to the upside, as the 21 and 144 SMAs are about to make a bullish cross, and we see general bullishness in the S&P and the German DAX, and also on the Japanese yen, all of which suggest that we may see another rebound in oil prices. Furthermore, this upside here counts better as a 5-wave move. However, it could be counted as an A, B, C, and therefore prices may continue to the downside. For now it is unclear where oil prices are heading, and we're looking for a reversal back above that trend line to gain some more confidence in the bullish outlook of crude oil. S&P 500 was stronger than the DAX, and it remained on the upside with only a modest decline near the 144 period SMA, only to break above it, and as it looks, it will also close today above the SMA, posting a clear bullish reversal signal for the midterm, suggesting that prices are about to move to higher levels and eventually in a couple of weeks or months to new highs, to new all-time highs for the North American index. The momentum remains supported by this trend line, and prices remain supported by the SMAs, 21 and 55 SMAs, and this upsloping trend line on the price chart. As for gold, as we suggested with our weekly report, another high has been made, and prices are still strong. We expect prices to find resistance at the 61.8% retracement of the prior decline, which represents wave A of 5 to the downside, and the intersection of this Fibonacci level with the upper boundaries of this channel within which it's trending since the beginning of December will provide solid resistance, and prices should reverse lower. This trend line that has made a false break last week now continues to support prices, and a break below that trend line will give us the first signal that the wave C of gold has started. Also, we see divergence forming in the 14 period RSI, which also supports the idea of a wave 3 to 5 count here, because usually we have divergence between wave 3 top and wave 5 top here, as we see here. The euro posted another strong rebound, and as we suggested with our post a few hours ago, this move here, this move of ups and downs, counts well as a triangle, which is about to be complete. And if we go into small time frames, I don't have the labels on the 4-hour chart, but I would like to show you how this move is in 5 waves, and then we have this move here as an ABC, 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 and ABC, ABC for E wave V will complete around these levels, and prices to continue in an impulsive manner to the downside for wave C of 5, probably reaching this low here, as the extension of this trend line points at that level too. The decline is expected to be very sharp, and I believe that the most part of it will be retraced by wave 2, creating a bull trap again before continuing to lower levels. For now, as long this top here at 0967 is not penetrated, the triangle idea for wave B of 5 remains intact and is the most probable pattern here in the euro dollar, as this choppiness for the last 2 months makes it very difficult to count the wave action, the price action in a different way. As for the Australian dollar, we just prepared a few minutes, or I don't know if it is an hour ago, our RBA interest rate event special post, special article, where we explain exactly what we expect for the Australian dollar tonight during the interest rate event of the Reserve Bank of Australia. Currently, prices are facing resistance by this trend line, which connect important lows on higher time frames, and there is a high probability that prices will break above this level and try to hit the 50% Fibonacci fan level here before moving lower, as this move from here seems to be incomplete for now, although we will not be surprised if prices directly move to the downside from here. Overall, our expectations are bearish, despite the fact that the momentum is bullish and prices are supported by this trend line and the 21 period SMA, while they remain above actually all the SMAs. I expect that the interest rate event tonight tonight will be a game changer for the pair, which will move sharply to the downside for wave 3. As for the Canadian dollar, we see a decorrelation of the pair with oil prices, and I actually believe that the pair, the instrument that is leading is the Canadian dollar. Therefore, I believe that we will soon have a rebound in oil prices, and that's why the Canadian dollar is dropping further. The move from the top counts. We can count 5 complete waves here at this level. And whether this decline from here is, I don't know, some kind of ending diagonal wave 5 of this wave, or this is a down slopey wave 2, and prices will move very sharply from here to the downside, is something that we will have to wait to see. For now, the momentum is bearish, and the 9 period SMA is trying to make another bearish cross with the RSI, and the pair looks vulnerable to more losses in the coming sessions. Strong resistance lies at the low of wave 4 at 138, which is also a psychological level, and if this level is broken, it opens the path for the 133.50 level, a very long distance that may happen without any significant correction before that, giving us an opportunity to short the instrument. As for the Japanese yen against the US dollar, it remains broadly bullish. Prices have bounced, as we suggested with our previous daily summary video, from the 144 period SMA, and the rebound was sharp. Prices remain bullish and should continue to the upside after this short-term correction is finished. And I believe that it will happen not before Friday's NFP release, which I expect to give a considerable boost on the US dollar across the board. Finally, the New Zealand dollar moved higher, and that makes us change our count from a completed wave 2 here to a wave 2 that is still under development, and the rebound from here is very sharp, and it seems incomplete. Price should continue to the upside before completed wave 2. However, the 144 period SMA is expected to provide significant resistance here, and any attempt to move above here will reverse lower for the beginning of wave 3 to the downside. For now the momentum is bullish and we expect higher prices and the reversal after that. That was the daily summary for the first week of February, the first day of February. Thank you for watching and see you tomorrow. Thank you.